you are running an SA business, and you have done for a few years. You have done for a few years. How many units do you own right now? You've been quite aggressive, enthusiastic over the last 5 years buying SA units. So how many units do you own right now?
20.
20 units. And these are all your units, not rent to SA, yes?
Sorry, are we role playing or in real life?
Role play? What's role play? This is all real stuff.
Oh, okay. So 18 units rent to SA.
Okay.
Owners, JV, it's 1.
Let's start again. Blandine, you have 20 units that you've been buying over the last 5 years, and you own all the properties yourself.
Yes.
You do?
Yes.
Yes? Good. I thought you did, because that's what you told me last night.
That was a different role.
It wasn't that late, and we weren't role playing, by the way. All right? Thank you, Kieran. Okay? Yesterday afternoon. Okay? And in these 20 units, how much profit do you make every year? $500 grand?
Yeah.
You don't seem to happy with that. So we'll go with 500 grand. And so Brian, blanket answer, should Blandine run this business as a partnership, sole trader, LLP or limited company?
Limited company.
Okay.
Holding company structure.
Okay, so Brian says limited company. So this is what Blandine has done, by the way. She started as an LLP. And makes 500 grand profit per year. And on every unit that you purchase, Blandine, so we're going to go over here, how much capital allowances did you get value-wise? Let's just pretend you bought every unit for 500 grand. We're just making up the numbers, okay, for the purpose of the exercise. So each unit is 500 grand. What were the capital allowances on each unit? When you bought it on purchase, the value of the capital allowances. So when you bought the property, you sent me in there, I surveyed the property, said you got the ceilings, aircon, okay, fire alarm, smokes, camera system, flooring, all that kind of stuff. I added it up. There's an easy number you can come to.
100,000?
100,000, okay. So I got £100,000 over here, okay, on purchase. Okay, which gives you 2 million. Then you refurbish the properties. How much did you spend on the refurb on a 500 grand property and get additional capital allowances? Another 100 grand? Yeah? So you got another 2 million. So Blandine's got £4 million worth of capital allowances. She's with £500,000 profit. On the new capital allowances, by the way, she can use up 1 million in one go and create a taxable loss up until the 31st of March 2023. After the 31st of March 2023, she can use £200,000 in one go. The benefit of using the capital allowances in one go is you get tax relief straight away, or you carry forward a taxable loss, which I'll come to in a second. If you don't use it in one go, then you can only use a certain percentage, which we'll cover, based on the type of item it is and which capital allowance pool it goes into. Okay? So Blandine wants to do this, okay? So if Blandine uses 500 grand in one go, how much profit have you made, Blandine? When you go to your bank manager and say, I'm buying my 21st property, can you give me a loan? And you give him your accounts, what profit figure is he going to see?
He's not going to be happy.
No, he's going to be very happy. He's going to be very happy. What figure is he going to see? He's going to see this figure here. This is on your tax computation that the bank never asks you for. The bank always asks you for your financials, don't they, Brian?
Yeah.
Which is your P&L account and your balance sheet for this year, last year, the year before possibly, and management accounts for projections going forward. So he thinks you made 500 grand profit, which you did. What he doesn't know is you paid zero tax. Yeah, so because people usually ask, well, if I claim all my capital allowances, I'm going to make no profit, I can't get a loan. Well, you can. Okay, if you use up 500 grand worth of capital allowances, how much have you got left over here? 4 million less 500 grand?
Yeah.
3.5.
Yeah.
So keep following this blending, this is important. Now you know, because you went on a tax course a long time ago, that if you have an LLP and you make 500 grand profit and you don't take any money out of the business, you pay tax on the whole lot. So you've got 500 grand sat in your bank account right now on which you have to pay tax at your personal rate. But because you've claimed the capital allowances, you're going to pay no tax. So if you take that £500,000 out of your limited liability partnership and pay off your personal mortgage, buy a new car, buy a holiday home in France, elsewhere, okay, or do what you like, how much tax are you going to pay when you transfer those funds from your LLP into your personal bank account? Anybody can help?
Zero.
Yeah? Yeah, so Brian, Andrew, and Motil saying zero. Yeah, do you agree with that?
Yeah.
Yeah? Now we're going to run this scenario over here, which I haven't got much space, by the way, but I don't need much space. Got £500,000 in your company. You claim 500 grand capital allowances. The company's made no taxable profit, so it pays no corporation tax. You now want to do the same thing. You want to take out the £500,000 to buy a new holiday home in France. How much tax are you going to pay when you take the money out of your limited company? Brian?
You pay dividend tax.
You pay dividend tax,
Yeah.
okay? So you're going to pay, let's just call it 1/3 to keep it easy, okay? So you take 500 grand out, you're going to pay 150 grand income tax. So Brian, is Blandine better off having a limited company or an LLP?
Loaded question. Yeah, LLP, definitely. Yeah.
LLP. Can you see where we're going with this? Now because you're smart, Blandine, this only works, by the way, if you've got capital allowances.
Yeah.
Okay? Because you're smart, Blandine, what you're going to do is you've got 500 grand profit. Depending on how many family members you've got in your pension, you might transfer £40,000 and have 460 left as profit. You might not have used the last 3 years' allowance, even though you qualified to do so. So you get another 120 in any 1 year. £340. And if you've got a husband, wife, child, mother, father, okay, somebody else as part of your pension, you could transfer the whole lot into your SAS and not pay any tax. But let's say you get to here, okay? So you've locked away this money here, 120 plus 160 into your SAS. You then use up 340 capital allowances. And you've got no taxable profit. That figure there is 4 million less than the 340, yeah? You carry forward the figure, let's call it 400 grand. I like easy numbers, yeah? You've got 3.6 million left. Year 2, we haven't finished yet, by the way. Year 2, you got 3.6 million. So you make 500 grand profit again. you can claim a certain percentage of the 3.6 million. Okay, let's just call it 10%. It isn't 10%, by the way, and I'll put the table for you. Call it 10%. So you can claim 10% of 3.6 million, which is 360. So you can write up 360 here for capital allowances. You can then write off 40 grand for your pension. So you're paying tax on 100 grand on your personal tax rate, yeah? Are you with me? But because you're clever, this is what you're going to do. In that particular year, the previous year, you've got 500 grand profit. Let's say you've used up your SAS allowance from the previous years. You've transferred 500 grand in 1 year. You're thinking, I've got enough in my SAS now. The SAS is getting to our lifetime limit. Okay, it's you and your. Do you have a husband or a wife? Or no, don't have to. Do you have any children by any chance? Any children? Okay, okay. You've got 2 children. Both of them are part of your SAS. So you're about 2.9 million, 2.8 million. And you're thinking, I don't want to put any more money in there because there's some natural growth in the value of the properties. It's going to get me to 3 million quid, and just over 3 million to 3.3. It's going to cause us a problem because I've got rental income coming in from the properties, commercial properties. So I don't want to put any more money in my SAS. I'm happy there. Okay. What you would do is you'd say, I spent £2 million on this refurb here. You know right now you can claim £1 million using your annual investment allowance. That's what it's called, okay? AIA. You claim £1 million and you create a £500,000 taxable loss. Is that a problem, Blandine, that you made a taxable loss? No problem whatsoever, says Brian.
Carry forward.
You carry forward. Because over here, remember, you were going to pay tax on 100 grand, yeah? And if you don't, use the pension on 140 grand. Here you got taxable loss of 500 grand. Next year you make 500 grand profit. You've already got the capital allowances there. You write it off. Year 2, no tax, yeah? Year 3, over here, you bought some more properties, haven't you? Because you're making money. You bought some more properties, so 20 units becomes 22 units. On the 2 additional units, you've got capital allowances of 100 grand each on the purchase, plus 200 grand for the refurb. So can you see this figure here? As you're using it up, although it's going to reduce, you're buying more properties and you're increasing the capital allowances. So up to a certain number, and this depends on how aggressive you are with buying properties, you could get to a stage where you are not paying tax for quite a while using just SAS and capital allowances. Thanks for watching, and I hope you enjoyed this video. If you have, by the way, make sure you click like, subscribe and post a comment because that tells me that you're engaging and you're finding the content useful. And if you like this video, make sure you check out this video here because it's the next stage in terms of your learning and development.